Hi, Jeff Ducharme here. Talking to you today about mutual funds. That's the continuing of our investment series, talking about our investment options. Primerica, we don't sell individual stocks or bonds or options or any of that stuff, so we have a few basic investments that we do. Um, the basic one, the one that we deal with the majority of the time, is called a mutual fund. And all a mutual fund is, mutual means many, and a fund is a pool of money. And so what ends up happening is you have thousands of people, sometimes more than that accumulate their money together into a fund. And the fund accumulates this money. It's millions of dollars, sometimes more than that. And they will buy a bunch of different stuff. And so by investing in that fund, you own a small piece of the pie of the fund, and therefore you own a small piece of all of the things they invest in. So, for example, if it's a stock-based mutual fund, they may own stock in over 100 different companies across different segments, technology companies, energy companies, banking companies, manufacturing companies, etc. And so by you putting some money into that fund, you own a small piece of those different companies and those segments. So it's a way of getting diversified as an investor without having a lot of money. So diversification is really important. We're going to talk about several key things, but that's one of the things that it does for you. For you to become diversified, investing in stocks, for example, on your own, if you wanted to do it in a smart way, you would need to have a lot of money, because typically shares of stocks are sold in blocks of 100, and if a stock sells for $40 a share, you have to have $4,000 just to buy 100 shares of one company. And if you wanted to be diversified, you'd have to do that with several different companies, so it can get pretty pricey for the average middle class person. Wouldn't probably be able to do that. So mutual funds offers a way for people to get into a fund. A lot of them are as little as $50 a month to get started. They'll waive the upfront portion that you need to put in, and they'll let you get in for $50 a month, as long as you have it on an automatic withdrawal out of a savings or a checking account. So it's a way of getting diversified. Now, there's all kinds of different mutual funds, from some that are very aggressive and some that are very conservative, and everything in between. So it goes from a vast scale across of different things. So when you're talking with your client, we have a form that we use, that we ask a lot of questions about them, about what they're doing, what their goals are with the money that they want to invest. We also, obviously at Primerica, we look at their whole financial program and what's going on. So we know what's going on with their insurances, we know what's going on with their investments at work, like their 401ks and stuff like that. We know what's going on with their debt, with their mortgage, with their legal stuff, etc. So we can better advise people as to how to invest, or we can point them in the direction we think they should go. But we have to listen to their input. We have to ask questions about how they feel about risk, how they feel if the account would start to go down in value. Would they freak out? Would that really bother them? And so a lot of what is their time horizon? Are they investing for a really short period of time? If so, then mutual funds or investments might not be appropriate for them. Or are they investing for a long period of time? They're 40 years old and they're saving for their retirement, so they've got 20, 25 years to go, which would be considered a long-term time horizon. So where are they at in this thing? And then there's different types of mutual funds. There's ones that are in stocks. There's some that are in bonds, etc. So stocks, that's typically, if you see something that says it's in growth. Bonds is considered income, because a lot of bonds pay an income stream via dividends. They give income off. So in growth, stocks, you're investing in a company. You're looking to participate in that company's growth. So a mutual fund might take these millions of dollars and they'll buy 100,000 shares of Alcoa, and 200,000 shares of Walmart, and 50,000 shares of ExxonMobil, and so forth. And they'll build a portfolio up, and they have they have either a manager or a group of managers that decide what to do. There are also, there's a lot available, information available to them that wouldn't be available to the average everyday person that wanted to do it for themselves, say through, E-Trade or something like that. The reason why is, they get access to a lot of different information because they're going to buy, a couple 100,000 shares of a company's stock. The company is willing to, really give them more information about what they're doing, what their plans are, research and development, what they've got going on. And so that kind of information can be used to really help things along. So as an individual investor putting money into a mutual fund, you have no input as to what they're going to buy or sell or so forth. So you're just looking for a fund that fits your profile for, what you're looking to do. Are you looking to be very aggressive? Are you looking to be very conservative, or something in between? So again, stocks are growth, bonds are income, and then there's sometimes in the middle you'll see some funds that are termed balanced, or they're called growth and income funds, and so they have some of stocks and bonds in them. But a lot of times what we do for clients is we'll help them build a portfolio, and we'll do what's called an asset allocation. We'll handle that in the next video series, what asset allocation means. But this is the basics of how a mutual fund is set up and what you can do. Now, within stocks, you have companies that are large, like Walmart or something, that are very established, and you have companies that are small, that are just getting started. And then you have something in the middle, which is called a mid. So again, we have large, so if you see a mutual fund that's described as a large cap growth fund, that's going to deal with, larger size companies. If you see a small cap aggressive growth fund, then it's going to be investing primarily in smaller companies. So again, large company, much less risk. They're already big. They've been established. They've got a lot of assets, but the growth probably isn't as dynamic either. So small can have rapid, big-time growth, but it also can have rapid, big-time drops. So we need to understand what our client wants and what they're looking to do. And there's also different other types of funds. Like there's sometimes they're called select funds. Like for example, you may have a fund that invests only in energy, and it may be the XYZ Energy Mutual Fund, and that's going to invest only in companies that deal with energy. Or you'll have another one that's a real estate fund, or another one that's a utility fund, or so forth. And so those are, a select, because they're going to be in a category, and they're not going to be as diversified. They're going to be specifically targeting one type of fund. You'll also have some that are gold or precious metals, stuff like that. So sometimes you'll have a gold fund. So again, some people want that, and that's what they're looking for, and that's something that's appropriate for them. So we have to look at our client and see what we can do. Now, within Primerica, mutual funds makes up the biggest portion of our investment business. And so what you need to understand is that we do annuities, and we have fixed annuities, we have variable annuities. And so that's something too. But at the same time, this is going to be the hub of what we're going to do for investing is mutual funds. We deal with over 10 different companies, and they all have dozens of mutual funds. So within our portfolio, we probably have close to 1,000 mutual funds that we can potentially offer to our clients. Now, you can either go by your upline, like your regional vice president could help you to say, well, these are the funds that he or she likes to use, and they've already done the research on, and they feel very good about for different reasons, and they'll say, well, these are the ones that I recommend to my clients, and then you could just copy that and follow it, because I'm sure that's good advice. Or if you wanted to, once you get investment license and so forth, if you wanted to actually start going through the different companies, whether it's Fidelity, like I have Fidelity shirt on today, Fidelity, American Century, Lake Mason, American Funds, there's a bunch of different ones, Alliance Bernstein, Pioneer, Putnam, MFS.